Still in Europe, Uber, the low-budget pay-per-ride operator, may cease to exist in London after September 30 as the London transportation regulator plans not to renew its license, which expires on that day. Uber London Limited has immediately signified its intention to appeal the decision to revoke its license. London Transportation Authority says it has reviewed Uber services in the city and found the company has demonstrated a lack of corporate responsibility in a number of issues, including its approach to reporting serious criminal offences. Uber faces tough resistance in a number of markets around the world, including African markets such as Nigeria and Kenya. In the U.S., the stock index futures pointed to a lower open on Friday as fresh threats from North Korea revived geopolitical tensions. North Korean leader Kim Jong-un said on Thursday that he was considering the highest level of hardline countermeasure in response to Trump's warning the U.S. would be prepared to totally destroy Pyongyang if forced to defend itself or its allies. On the earnings front, CarMax and Finish Line are both due to release their latest earnings figures before the bell. The Dow Jones Industrial Average fell for the first time in 10 days on Thursday, closing lower even after a small gain at the open took the benchmark to a new record. The Federal Reserve announced on Wednesday it will begin rolling off its $4.5 trillion balance sheet starting in October. The central bank did not raise its benchmark interest rate from its current 1% to 1.25% target. However, its updated rate forecast showed another hike this year is likely. While those futures number there looking red, Dow Jones 0.08% down, S&P 500 0.11% down, and Nasdaq 0.19% down. In Asia, most markets there closed lower on Friday after North Korea threatened it could consider testing a nuclear weapon in the Pacific. Investors also digested the prospects of an additional rate hike from the Fed this year. Japan's Nikkei 225 raised early gains to close down 0.25%. Across the Korean Strait, the Kospi fell 0.74%, while the tech-heavy Nasdaq index tumbled 1.84% by the end of the session. Greater China markets were lower after S&P downgraded China's sovereign credit rating to A+ from AA-, citing the mainland's credit growth as a risk. The downgrade from S&P put its rating in line with Moody's and Fitch. The Hang Seng index fell 0.81%. Mainland markets saw more moderate losses. The Shanghai Composite slipped 0.15% and the Shenzhen Composite shed 0.342%. The S&P ASX 200 shrugged off the news to gain 0.47%, with a heavily weighted financial sub-index climbing 0.92% by the end of trading. And to other markets news here in Africa, Africa's largest cement producer, Dangote Cement PLC, may report $3 billion in group sales in 2017 if plans by the Nigeria-based industrial giant goes through to acquire South Africa's PPC cement facility. In a report released today by the investment and securities firm FBN Quest, Dangote Cement's group sales in the current year is forecast at $2.3 billion as a standalone entity, while South Africa's PPC sales is estimated at $700 million US. The report says that if Dangote Cement picks up 100% equity stake in PPC of South Africa, the Nigerian giant will have to issue around 1.3 billion additional shares, excluding premium or goodwill. FBN Quest estimates a potential earnings per share dilution of around 7% to the combined entity's 2017 full-year estimate of EPS. Dangote Cement shares have shed 4.3% in the week, and the market may react even more negatively in the event that Dangote bids aggressively, the report concludes. And Steinhoff says it has presented its argument to a Dutch court and was certain a petition made by a former joint venture partner seeking a probe into the South African group's accounts will be dismissed within the next 2 months. The firm, also under scrutiny for alleged accounting fraud in Germany, has previously said that legal and external audit firms it had appointed had concluded there was no evidence of any wrongdoing. On Handels, GmbH and MW Handles GmbH, owned by the former JV partner, had filed the petition with the Enterprise Chamber of the Amsterdam Court of Appeal, asking the court to order a probe into the group's annual accounts. The petition came on the heels of news about German prosecutors investigating some current and former executives from Steinhoff, Europe's #2 furniture retailer after IKEA, for suspected accounting fraud. Earlier this week, Steinhoff's African unit made its market debut, surging nearly 10% as investors looked past its parent company's legal wrangles in Europe and piled into the continent's retail powerhouse.